Hello and welcome to the day ahead. It is Tuesday, May the 5th. I'm Andrew Gagan. Well, the local market is set to extend its losses today with ASX futures down 0.8%. It was risk off on global markets overnight as Iran hit several ships in the Strait of Hormuz and attacked a UAE oil port, sending oil prices soaring. The escalation of hostilities in the Middle East saw stocks on Wall Street retreat from their record highs despite optimism about strong first quarter earnings reports. 10 of the 11 S&P 500 sectors declined, led lower by materials and industrials, while the energy sector rose. Among the AI heavyweights, some of which have recently reported, Alphabet and Microsoft finished lower. Amazon was among the best performers after unveiling a suite of logistics services that will let businesses buy its existing freight and distribution offerings as a package, and that move sent shares in delivery firms FedEx and UPS sharply lower. Palantir beat estimates for first quarter revenue driven by rising demand for its data analytics software from the US government. Paramount Skydance's pre-tax earnings rose in the first quarter as streamlined operations helped offset declines in its television division. This follows the recent $110 billion deal it struck to acquire Warner Brothers Discovery. Pinterest forecasts second quarter revenue above analyst estimates, helped by steady spending from its advertisers as it sharpens its ad offerings with the use of AI, while language learning app Duolingo posted strong first quarter results but signalled a more measured growth trajectory. Shares in cruise operator Norwegian sunk after slashing its annual forecast due to high fuel costs related to the Middle East conflict. And former meme stock GameStop has launched an audacious attempt to buy eBay for about $56 billion in cash and stock. Well, President Trump has launched a US Navy operation seeking to open the Strait of Hormuz to shipping, which has prompted an immediate response from Iran to keep control of the critical shipping route. 2 US Navy-guided missile destroyers entered the Gulf to break an Iranian blockade, and the commander of US forces said his fleet had destroyed 6 small Iranian boats, which Iran denied. Iran has retaliated, launching drone and missile attacks on the UAE, including one that caused a fire at a key oil port, with the UAE saying it reserved the right to respond. Meanwhile, in the US, Federal Reserve New York President John Williams has said interest rates will need to come down, saying we will at some point need to be lowering interest rates to reflect the fact that inflation is lower. Inflation is higher this year than previously expected, so that pushes off a date of lowering interest rates. US Treasury yields have jumped higher, with the 10-year yield registering its biggest daily increase in 6 weeks, climbing to 4.46. The 2-year is at 3.99%. Australian 3-year government bond yields are around 4.7%. The 10-year is up to 5.06, with markets pricing in an 80% chance the RBA cash rate will be hiked by 25 basis points today. The US dollar index is up around 1/3%. The Aussie has fallen to 71.7 US cents. Oil prices have jumped higher after the US Navy-guided missile destroyers entered the Gulf to break a blockade, prompting Iran to attack an oil port in the UAE. Brent crude up around 5.5% to $114 a barrel. Gold has fallen on renewed inflation concerns, spot gold at around $4,520 an ounce. Copper's fallen 2%, iron ore is at 110 US a tonne, and Bitcoin has eclipsed $80,000 for the first time since January and is up around 20% since the beginning of the war. Ahead today, the Reserve Bank will hand down its policy decision, with the major banks expecting the board to hike the cash rate by 25 basis points to 4.35%. And corporate results are due today from Dexus and Vicinity Centres. And Westpac's interim profit has increased 1% to $3.5 billion compared to the prior first half, boosted by solid lending and deposit growth of 7%, but the bank has warned of more challenging times ahead. That is your day ahead. See you again tomorrow.